Hi, today is Saturday, the 20th of March, if I'm not mistaken. That's correct. And this is the SPX Outlook, and we start, as we usually do, with a 4-hour chart, which gives us generally a 1 to 2 day outlook. So that's not good enough for the whole week. And once again, I invite you to join the Slack group where I provide updates at least twice a day. So the week started on the 13th. I mean, we had such a bull run from the little hiccup early March, and then we had a bull run. And on the 12th last week, we closed at around 39.25. Then it ran again for all-time highs, bit of a correction, or at least some profit-taking, hesitation. Then a run to 39.90, at least on the CFD. This may not be exact same prices as on the real index because the CFD is an instrument that's calculated from the futures discounted for time. And then we had this run to almost 4,000 at FOMC. And as usual, or maybe let's not say usual, but as it is common, the next day we saw some counter reaction. So basically, SPX drifting down. Probably more surprisingly, it broke support here around 39.40, and on Friday we had a bout of selling. It even penetrated below the 39.05 now pivot, at least on this time frame, and it recovered late in the day. So we are still above that pivot level at this point. So as you can see here, we had a upward channel, and it broke this upward channel, tried to claw back into it, and then fell. So I am trying to put on a downward channel now, at least tentatively, and I am not sure whether it's going to pan out that way. I suppose the 39.05 will be fought again as support. As you can see, the market dropped to 38.88, which is on this longer pattern, the first fib. I would assume a lower fib would have to be tested to really see a change in the trend. And because it's still a tug of war, I do anticipate that this type of channel or gradient is probably sustainable. I do not see a major correction yet, at least unless we have, I mean, we've seen some sector rotation. We've seen the bonds taking a hit. So basically interest rates or yields going up, which should be bad for equities as well. But there's so much liquidity at the moment that this is blurring the picture quite a bit. So I would anticipate some fighting, and maybe if the market doesn't go back above 39.40, 39.50, it will probably stick to this channel. So I would say a bearish bias or bearish tone, but we can only confirm the bearishness if this pivot is broken. Otherwise, the market will still try and aim for the upper part of this range. If it doesn't, although I do not anticipate a major sell-off, we do have that support level here, which is more or less on the early March lows. And that would maybe say, well, this excursion north of former resistance, now pivot, was just an anomaly, and the market is ready to go down. So the pace of selling is still unknown, and I do not anticipate it to be fast. Although we had some good selling on Friday, but also this was quadruple witching, and of course the big players tried to push the settlement price down. It was about 13.13 or 13.12, and now the market will definitely recalibrate. The big players will look now for June as a major expiration. Rollover to April is not as important as June is for the big institutions. So we will see where the market will find equilibrium, and this test level is quite important. If we look at the daily chart, here we see that the market try to really go higher than previous highs, and now I would also anticipate that it will maybe look downward. Let's not forget that what is pivot or even support on the 4-hour time frame is still resistance here. It is calculated on 3 being 128 bars, but even if I put 2 or 1, it doesn't change. So it shows that this is still technically just an excursion north, even though it has been tested for support. It would be normal to see the market fall out of steam. That being said, we never know what can happen when it comes to so much liquidity being poured into the market. So that's fairly bearish also here. This red candle is bearish. So we will check for the fibs here to see whether it bounces on the support. Of course, we could have then the market aiming high again, at least, but not in the short term. This daily time frame is probably a picture for the next week or so. Okay, now let's look at the 1 hour chart for Monday. I often record this video on Monday morning when we have the futures prices when they reopen. I don't anticipate the market to really drop below 39.05 at the open on Friday on Sunday, although there have been very difficult talks between US and China and Alaska late last week, and there could be some jitters because things are not going too well on that front. Let's not forget that Secretary Blinken went to Japan with the Secretary of Defense. The British Navy will be sending an aircraft carrier to the zone in May. So I think the chessboard has been established. We have to be careful that the domino could fall in this second quarter. Right. So on this time frame, I would say the key level is, of course, 39.05, which could trigger some selling. Otherwise, I would say hovering on this downward channel, still to be confirmed. As a matter of fact, I would like to see, even though my positions are quite bearish, I'd like to see this channel being confirmed, being with possibly another bout of buying, maybe the last one, to one of those fibs, which would be 39.40, 39.50 by the time it happens. So overall, pretty bearish. However, I don't anticipate a sell-off at first. Anyway, thank you for watching. More updates on Slack as usual. So have a great weekend and bye for now.